And now we should start to process it. So, okay, it was a lot of technical information was presented last time about different aspects of the market, different product designs and so on, but still we are economists. Or you would like to be economist and already an economist, but doesn't matter because you learned a lot of things already. And right now we should see that what will determine the future value of this company and how can we improve this, because this is our job. So last week we talked about the product design and all these issues, but now we should see that how can we analyze this. So we defined this framework, and the key question is that what is the reason that this company is so unsuccessful? So you can remember that with their new innovative product, they had practically a non-existing market niche. So I can say that such order number can be real, because if they are just Googling that, okay, Falcon 9, Wikipedia, Wikipedia is coming up, and then there should be somewhere, not launch sites, whatever. So we can see that this is scaling up operation. So if you are able to increase launch number at this exponential or some kind of, according to some kind of a trend line, then we can see that you are growing. Already they have stuff already in the books in 2022, but even if we don't have exponential growth, then this linear stagnation, it's useless. Is this unique on the market or not? So let's see Rocket Lab, Electron, and Wikipedia, which is also a private company, just they have this small carbon fiber composite platform, doesn't matter. So what we see again as an economist that, launch outcomes, okay, there were some failures here and there, doesn't matter, they are stable on the market. So we can see that they are also able to grow. So the key problem, before we are doing anything here, is a general assessment of the situation. So we have to be able to understand that, do we have, what is happening with the market share? So the market share of the company is so not just not growing, but practically it's decreasing, because so other companies are growing at an exponential scale. Doesn't matter that Rocket Lab, okay, it's in the 1 to 10 scale, but still this is increasing. My SpaceX is in the 100s. So, but right now we are in zeros. So they are growing at an exponential scale, but ours not. So even if we are going back to Ariane 5, Wikipedia site, now it's already retired, doesn't matter because this is where we have statistics. So yeah, we can see that they had some increases, sometimes 7 launches happen, but after that it's a disaster. So it's practically a non-existing. It's a declining company. We are stagnating. Oh, sorry. Or previous products. Was losing. Phase before retirement. And the U1 is also how to say it nicely. So it doesn't have a bright future. So has only a stagnant. Now the next question is that is this because of market structure? Is this because of market demand? Or is this because we are inappropriate in terms of supply? So is this demand or supply problem? So, okay, nowadays it's hard to cite Musk since he went frenzy, but when he was not so overdosing ketamine and other things into his body, he was able to make much better presentations and about the market. And 10 years ago, he tried to... So he was defining their market model, business model, and he was using the example of railways. That orbital launches will be the new railways, which means that this will provide oligopolistic or sometimes even monopolistic ways of approaching distant places. So when the original railways were built in the continent and also in the US, it was financed by private companies, especially in the US, where we can still find private companies. So most of Florida was built up by railway companies, literally, so they owned mines, they were building small towns, bigger towns, they were even operating hotels and so on. So all the population centers, what you can find in Florida, they were built up by one company. So, and also in case of transportation, so it doesn't matter we are focusing on railways or we are focusing on the even older maritime transportation or also canal or channel building during the 1700s, it was always about bulk trade. So how can you move a huge mass of goods with as cheap price as possible? Because okay, you can put everything on horses and you can move the horses around. Just in this case, you will need a lot of horses, which means a lot of fixed costs. If you can use ships, that's the easiest thing because you can put all the weight in, and after that, with really low energy usage, you can move this amount of goods. On seas, it's easier. Inland, that's why they had to dig channels, and that's why it required a lot of investments. Railways are way easier because you don't have to build completely horizontally. You don't need this... what is the name of it, where you can elevate or diselevate the level of water? Doesn't matter. So you don't have to build difficult infrastructure. In this case, you had to spend way more on engineering and locomotives, and it was cheaper at the end of the day. But again, this is about moving bulk goods, iron ore, steel, grain, even passengers here and there. So the question is that what can be the bulk goods which can be transported and which can be served by orbital launches? What is your opinion? Why people are going into this sector to satisfy some kind of a demand for moving bulk goods or something? So obviously in this case, it can be data. So providing data about Earth current conditions like imaging satellites for agricultural purposes, imaging satellites to observe things in different countries or in your country, or it can be data or also to weather, for better weather forecasting. It can be data acquisition for industrial reasons, so you would like to track your own fleet, you would like to have real-time data about the conditions in your fleet. So Deutsche Bahn announced their program that they would like to equip all their locomotives with real-time data diagnostics. Because right now they are using still the century-old way that, okay, each locomotive must go in after some mileage and also after 1 week of operation to the local service center, and after different mileages they are checking the components that are they vary or not. So usually you have working hour and time determined or mileage determined checkouts, and it means that you have to take all the equipment to pieces, then put them. So which means that you have excessive work, and until this point you are not able to use the locomotive, but the same thing is valid for airliners, for airplanes as well. So if you are able to build up sensors within the equipment and also ways to move this data from the sensors to your data center and process it, and to understand that, okay, this component is in absolutely good condition, you don't have to remove it because it can still do their job, then you can save a lot of money. So this Internet of Things data transmission, in many of cases, this is absolutely business to business. It's nothing to do with everyday consumers. Also, fleet tracking on the sea in maritime transportation, that was also really crucial, to provide them data about weather forecast, to provide them data about where to go, which harbors to go. So not just for tracking, but also communicating back and forth. And of course, when Musk was making this presentation about that they would like to become the new railway, they also realized that the market is not growing fast enough. So you can launch some satellites, some constellations. Constellation is nowadays the trend. So you are not just launching one satellite, but at least a dozen, or so somewhere between 10 and 100 to have global coverage. Because the problem is that you cannot stay at the same place. Or you have to be really far away at a geostationary orbit and 30-something thousand kilometers, or if you are closer, to provide really fast communication, then in this case it means that you have a lot of satellites, or you need a lot of satellites to provide coverage for the same place, because they have to go fast. I mean, at every 19 minutes you have to go around the planet if you are at 300 kilometers, for example. So you need a lot of things, so that's why you are building constellation. And they realized that, okay, let's build their own constellation. So they were already launching communication satellites already for a decade, and then they started to build their own network. But in this case, they started to focus not just to business data transmission, but also for consumers. Okay, for consumers who would like to pay $100 to $500. So this is not me like a consumer, but wealthier consumers, or who have absolutely no data coverage. So there are still places on the planet where you don't have 4G mobile internet, but you can distribute to use your laptop at your workspace or workplace. But even in the US or in Germany, or even in remote places in Hungary. So because this is a mountainous area, or there are not so many people, because still to build up a mobile cell tower and build all the infrastructure there, you need a lot of money. So in this case, on orbit, you can do it easily, because at the end of the day, the satellites is 200, 300, 500 kilometers away, but you have direct visibility. So after that, technologies was not that impossible, but because you need a phased array antenna, so you need some kind of a surface which full of phased array antennas are like a surface with full of lot of pins. So in this case, you don't have to move the whole antenna like in old radars, but practically you can use the whole surface and it moves not artificially, so digitally. So it can be way better. It was coming from the military, but nowadays we can use it for data transfer as well. So after that, they started to test this, that how can you use it for household purposes, how can you use it for industrial purposes. So now they are selling it for airplanes. They were also testing it on some launches, or in, I think, all the launches of the spaceship. So they are testing it here and there, but practically nowadays they already have more than 2 million customers. So now the whole Starlink constellation with all the 1,000 satellites, they have global coverage and also user base. So that's why we can say that demand problem is visible. So demand problem is present. So there is a huge backlog in satellite manufacturing. So we have to wait for years to get a satellite. So if you would like to open a company, then you should open it in satellite manufacturing, not in launch business. Because you can use off-the-shelf components, you don't have to build up. So it's not the 70s or 80s anymore, where all the satellites were built from customized components. You are just going into the local store and you can buy stuff from there. Much more cheaper. So that is insufficient. So number of goods to launch in space. And also the problem is that usually they are small. So you can launch CubeSats, which is this 10 centimeter to 10 centimeter cubes, until the size of a fridge, which is bigger than a cube. But usually the weight is somewhere between some kilograms to some 100 kilograms. So that was the reason why everybody tried to develop a small launch vehicle during the 2010s, because people were thinking that now we have this really low-weighted satellites, so we can do it. Just the problem is that this is not scaling up, or not within scale, because fixed cost of the launch vehicle will be still present. So the solution was for that the fixed cost and small medium slots would be so mostly what people were coming up that, okay, let's buy a medium launch rocket which is capable to launch ton or tonnage of, or let's say 1 to 10 tonnage of cargo, and then you are put everything in it. So you are sometimes they are launching more than 100 of these small sats into space, because in this case you can get economics of scale. So 50 to 100. So even Rocket Lab, Peter Beck was the founder and the engineer of Rocket Lab. In the past, he said two things. First thing is that he will eat his hat if they are going for reusability, because they were thinking that if they are building cheap enough rockets from manufacturing cost point of view, then they don't have to recover it. The second thing was that they don't want to build medium launch vehicles, because their small sat launch vehicle will be good enough. So he was eating his hat several years ago. You can find the video online. And as a result, they also announced, and right now they are developing the engine and the whole platform for their Neutron medium launch vehicle. So so therefore there is only a demand for launch vehicle that can lift 1 to 10 tonnage. That's why it will be really interesting to see that, okay, Starship can launch right now, according to the current communication, 100 tonnage into low Earth orbit. We will see. But even if we are halving it, then it's still enormous. But can you fill it up with commercial payload? Okay, if they are just using it to launch their Starlink satellites, we can say it's reasonable. It can be reasonable, just it would be overkill, because you can do the same job with Falcon 9s in this case. So that would be nothing innovative anymore. Okay, so we can say that there was a demand issue. Yeah. Partially, this is why which one is Virgin Orbit or Virgin Galaxy defaulted? I think Virgin Orbit. Yes, Virgin Orbit defaulted. And it ended sadly. So they were even publicly listed for 3.7 billion US dollar, and at the end of the day, when they defaulted, only 76 million was remaining. So Virgin Orbit and caps lock and Astra. Astra did not default it, they just pivoted out from the sector. Yes? Yes, I will upload it, definitely. Yes, of course. So, defaulted or pivoted out. So from supply side, you have to be cheap. that's a pretty simple solution. That if you can provide hamburger prices for tonnage, then you will be on the market, you will be competitive. If you are not able to do that, then you will lose your market, as we were able to see. So you have to increase so you have to increase your economics of scale. So all the fixed costs, so manufacturing, so maintaining the production line. Okay, so maintaining. Maintaining the manufacturing line, obviously launch infrastructure, launch and test, softwares and so on. What you need already when you doesn't have to do anything. Software. Okay. It will be still there. So last week Peter Beck had a really good presentation at one online symposium. I will put the link in the post space, and he was practically saying the same thing, that fixed costs will be there. So that's why you have to launch a lot, because you have enormous fixed costs. And the problem is that this industry requires the maintenance of a lot of 3D printers, CNC machines, and all the things which you need to build fancy things. But also with the same manufacturing equipment, you could build components for automotive industry, you could build components for airlines or any kind of other manufacturing industries, which means that the existence of the company is only reasonable if you can do this under better profit margins. There is a company, German company called Rocket Company Augsburg, and their philosophy is that literally they are buying components from the automotive sector. So they minimized all the research and development because they were coming from the automotive sectors, they are engineers, and they are saying that, oh, come on guys, all the equipment is already tested and available there for ridiculously cheap prices. Everything is mass manufactured, everything is tested, you know how this equipment behaves. So in this case, they are always also trying to cut down not just fixed costs, but also variable costs. We will see, because their first test equipment was burning up badly when they tested it last year. Hopefully this year we will see some launch in one way or another, but this is also a really strange approach that you can minimize your R&D if you are using already existing knowledge from another industry. Yeah. Also, variable costs can be kept low if we are if we are reusing things. Is it decreasing the manufacturing cost or not? Obviously it will decrease because we need less raw materials. So SpaceX buys only literally sheets of metal and rods, and after that they are building together their stuff. So at least less. Materials and subcomponents. We can see fuel, but as you were able to see, fuel expenditures are marginal, so you don't have to deal with that one. Yeah. Okay. Maybe we will expand this further, but we can see that this is the key problem. So we have to be cheap, and also we have to find our market niche. So yeah, the conclusion was missing from here. So yeah. So right now, this is a general assessment. Maybe we can expand it in the future, but right now we can see that this is the case. So, product design. Let's see the old original, let's say legacy design, what we inherited from the existence of the company. So this should be the Vulcan 2.1. It's 2.1, so I will show you the equipment because it's way better to imagine. So this rest nets is all the tubing, piping, and all the sensors which is doing the rocketing job. This is where the flame is coming out, and this is where you are burning some of the... No, this is a regenerative engine. Is this? Yes, good, just generate. Okay, so in this case you are warming up or expanding the really cold hydrogen, and this is what spins up the turbines, which feeds the fuel line. So in this case you are just heating up, not burning it, because this one is closed here. But doesn't matter, so they are using it since the 90s. And still they are refining it here and there. So if we are believing to Wikipedia, then part of the components were switched to 3D printing. So instead of building more than 100 individual components for the injector head, now they can print out the whole thing from one material, which means that less errors in the products, because in many cases rocket manufacturing is not expensive because the materials are expensive, but because you have many faulty products, because things are breaking here and there, and you have to find or identify the products which are not faulty. So in this case we can see that by using 3D printing, metal 3D printing, they were able to cut costs or component numbers by 90%, cost by 40%, production time by 30%, which is really good. So we can see this. Just the problem is that they did it nearly a decade ago, and since then we can't see any of the fruits. But okay, let's add it to our description. So engines. So we are using right now. So design original. Let's see at first how crappy the situation in the original case study before we are starting to become releasing or creative energies. So we are using the legacy Vulcan something 2.1 engine, which is so according to Wikipedia, yep. Because the problem is that if you are using screws to put things together, then you need some kind of a sealing between the two components, so it will fail. Also, the screws can dismantle, or also you need special torquing equipment. If you are shooting together with the rivet, then it can also break. If you are melting them together or welding them together, it will be nice, just in this case welding failures can happen, so 3D printing is provides way better homogeneous surface with less probability for error, so that's why it's popular in this industry. And also in case of titanium, you can save sometimes half of the necessary material compared to the usual manufacturing methods. And since titanium is not just expensive, but also for if you are doing anything with titanium, you have to use also titanium equipment to manage it, because otherwise all the steel or the iron and copper and other equipment, so all the other metals will diffuse themselves into your finished product, and this will make it brittle, so it will break easier. So that's why people don't like to work with titanium, because in this case all your manufacturing line must be changed with titanium components, subcomponents, and so on. So it's a nightmare. Okay. And okay, we are using this volcano engine. It uses hydrogen, which is terrible. That's why its launch cadence can be worse because of its leaking away. And this uses hydrogen, which is a problem with materials. Which is, okay, let's put the positive things first. So, which is an energy dense but highly problems. Problematic, sorry. Okay. Tremendous problems. Okay. Yeah. And also it's expensive. So we can see that the market price is 10 millions. But at least it's in-house, so we got euros. And in this case, to launch one vehicle, from financial point of view, we need only 3 engines. So 2 on the bottom and 1 on the second stage. In practice, you don't want to land with only 2 engines. So at least you need 3 engines because of balancing stuff out. But we are economists, not engineers. So let's put only 2 of them, because in this case, it will be cheaper. So, and we need 2 in the fourth stage and 1 in the second stage. Yes. And in this case, I was able to eliminate also the necessity of solid boosters. So we have all the power, what we need. But, okay, our engineers will be less happy, but that's the problem of the HR, not the people in finance. Also, we can see that fuel requirement. So, in amount of tonnage, that's why I mentioned that it's energy dense. So, we have to put only this super chilled 24 tons. So, you can see that it's 100, it's less. So in terms of cargo to fuel mass, this one is really efficient, because most of the tonnage is not cargo, it's fuel. So here we have to burn up such amount of tonnage to launch some 1 or 2 ton of cargo into space. Here we have very better ratio. So that's why hydrogen is popular, but yeah. Okay. So that's all what we were able to see about it. And also we need the body or the hull, sorry. The usual aluminum, which one? Aluminum, okay, because it's US. So aluminum, lithium, at least it's the same word in both Englishes. Alloy, because it's cheap, not cheap, absolutely not cheap, but compared to stainless steel, it's not cheap. Compared to carbon composites, absolutely cheap. So it is reasonably priced. And we have experience with that. There is this stir welding equipment which rubs from both sides of the metal, and after that this will be welded. So you don't need people with torches and so on, because it would melt down all the aluminium. Obviously it requires this stir welding machine, which is a bit more expensive, but it's still better than building huge robots which will sew your rocket body. Do you remember on the Titanic disaster? I mean the submarine Titanic disaster from last year, when the wealthy people built their own submersible and then it imploded in the deep sea, close to the original Titanic ship. So in this case, they were building this carbon fiber tube for themselves. They put two titanium front and back half cylinders, and what happened that it collapsed in the middle. So practically it shooted out the titanium ends and all the windows and so on immediately. What happened there, that practically there were imperfections in the material, what I was able to find from different data and videos. So you have to be really careful because carbon composites are always exploding. So metals are usually fade. So if you have metal fatigue, it will be always gradual. So you can see cracks here forming there, but mostly the structural material will be will remain powerful at least. In case of carbon fiber, if you have some structural problem, then it will explode in one or two directions. So that's why I'm absolutely afraid of buying carbon fiber bicycle. It's lighter and so on. It has many benefits, but if it cracks, then it will explode immediately. So, yes. Yes. Because carbon fiber is way, until it's not exploding, it's way sturdier, and it's way lighter. So you can build way lighter rockets, which means that you can send way more cargo, way more mass into space. So you can be more efficient because your weight to cargo ratio will improve a lot. So that would be the only benefit of using carbon composite, but right now only Rocket Lab was able to solve it at a whole rocket level. Other people or companies are using only to building small tanks like fridge size or things like this from carbon composite. Otherwise, they have no trust. Or also the fairing, which is on the top, which secures the satellite from atmospheric pressure during launch. These components are built only from carbon fiber. So if people could solve it, then it would be really good. But right now, this is the original design, which is absolutely conservative. And yeah, so now we can see the Excel sheet. So these are the main components that we can see here. And here you can see the launch vehicle design in this and all these 3 tables, which is really useful because after that all the data will be channeled into the profit and loss statement. So these are completely interlinked together, so let's go through all of them. So right now engine should be something, so this something will be Vulcane. Number for the first stage, we know that it's 2. And to simplify things, we are using the same engine. Some people don't like, or some companies are not following this, but we are about economics of scale. So for me, it's completely enough if we are building just one product line. Price for these engines, it can be also referred back to 10 million, 10 million. And also it must be multiplied by 2 because we have 2 engines. And we can use the same. This one. So we are C5, C5. Okay. Multiplied by 1. We are always using only one engine in the second stage. We don't need more. So if we have weaker engines, then only the numbers here will increase, but here it's not. Okay, fuel type, we know it's hydrogen. Yep. Okay, and fuel needs is both hydrogen. C4. And total fuel cost. Okay, so we have to refer on this tonnage. So let's say number will represent the tonnage here. So 24. And the price. Can we see any number here? Then let's open the case study. Because in the case study I had to dig so much to get this price for, not for the kerosene, because that was really easy to find data, but obviously there is a lower demand for chilled hydrogen, so yep, 6,000 tons in euros. So if you are multiplying them, you multiply by u, then okay, but these are in thousands, so sorry, we need it in millions because all the other things are in millions. So yeah, now it's good. So that's the unit price, and maybe I should not locate it here. Maybe I should do it because all the costs are here. So yeah. Okay. So now we can see that what can we recover here is. We already had the aluminium data here, so we don't have to modify this one. So recoverable costs are this price plus this price. So we can recover the engine, we can recover the body of the vehicle, and the non-recoverable costs are the second stage. And also the fuel, it would be really hard to recover it, and also the fairing, which will be dropped in the atmosphere and burns up. So what we can see here that altogether we have to manufacture and also fuel. So all the stuff together is 55 million euros for each launch. If we can recover the second or the first stage, then at least we don't have to manufacture this 33 million euro worth of equipment. we just have to manufacture regularly this 21 million euros, which is way better. So after that, the algorithm will calculate that, okay, we have to manufacture this, so E9, yeah. Yeah. So at the first time we have to manufacture both stages and so on. But after that, if we can recover it, then practically we have to use or manufacture only 9 times, and then we are reaching the end of the possible lifespan of the first stage. But now we can see that many Falcon 9s are above their 20th launches. But okay, let's keep the original structure. So if we are averaging this out, so checking that, okay, if we have 10 launches, then we can see that the manufacturing cost on average would be around 25 million euros, and then we can set our profit margin. So right now it's, by default it's 1.2, but we can be greedier. So let's see the market. Because we have this romantic approach here. So what is the threshold? We can get all these nice launches from our customers if we are under 59 million. Right now we are under, but we are economists. So if it means under, then it means as close as possible, because we need all the money as possible. Okay, so right now we are under. So I was able to increase the margin as much as possible. So 35% of margin. Obviously this one is just for manufacturing. So still after that we have to pay the people, we have to pay taxes, we have to pay maintenance, depreciation, and so on, so it will be lower. But at least from manufacturing point of view, our margin is positive. And nice. Okay, so what we can see here, okay, that we are under 60, because this number is lower than 60. So now we can add the launch numbers. So this is 4. So we are just to check the gray area here, which was given by the case study. And, okay, in this case we cannot launch 80 because we have only launch platform. So in this case we are limited in 52, because this is the usually from one launch platform we can see one launch in a week. So that's the highest launch cadence even at SpaceX. So that's why we are losing this one, and also we have 50. After that we don't care about the 6th year because it's too far away. So right now we can see some scale up. What we can see here on C here. So if we have some kind of a disruptive technology, then hopefully we will be okay with that. Okay, then engine stage probabilities. So probability of explosion. Then it's also coming from our database here. This is about landing, so we should look for the explosion at launch. Why is this so high? Okay, this was coming from the data from the beginning. Ariane had the tendency for explosion, but after that they were able to consolidate. Just the numbers are not that great, but doesn't matter. This is legacy hardware, so we have to live with this. Higher probabilities. So if it explodes, then it explodes. Obviously, failure in one component will result in the failure of the whole engine. That's why we have to multiply the probabilities, not just add them together. Because if one is set to 0, then the other components, doesn't matter how good they are, then they will be non-functioning. Then let's get the data from the case study again, and not the fuel rocket body. And in this case, what we can have the probability of RUD 5%, 4%, 3%, 2%, 1%. Okay. So 5%, 4%, 3%. So there is a learning curve. So we can see that the first year can be tricky, but after that we will be much better. Okay, right now what we can see here is the probability of non-recovery. So right now it's set to 100. If we are able to solve it, then obviously these numbers will coming up. But right now, let's see that what happens if we are not recovering anything. So we just had this stage. So not able to recover the first stage, and the number of missions should be linked to here. Oh, we have to add it because we are already not manufacturing it. Sorry guys. So we have to pick this one up. And can I create transfer? No, I cannot do it. Okay. Then can I do it here? No. Then I have to do manually. Great. Okay, I was able to transpose it. Then yay. So I was able to. Was I? No. 40, 40, 30. This should be 3 point. Otherwise it's good, just this one is not good. So you are coming with me. Come on! I'm always hitting the wrong button, so that's why we... Not good. Yes, only the number. And after that, this will remain the same, so... You are the same. So still we have some imperfections, so it's not completely perfect because this is engineering, not not finance. So yeah. So probability of first stage usage. Obviously this one it should go up, and then also with this probability it will go down as well, and after that still we have some stages. And after that is we'll calculate, okay, how many missions do we have, how many first stages we must be building. At the beginning this will scale terribly. So mostly what we can see that we have to build for 4 missions we have to build at least 3 stages. For 20 missions now we can build only, or we should build only 9 first stages. And once the technology is much more reliable, so more than 50% of chance, then our manufacturing demand or need will decline rapidly. Which is great because in this case what we can see that we will be able to cut a lot of costs while also increasing our revenues, because we get revenues from launches, but also our costs will be cut because of less manufacturing demand. Yeah. So let's see what is the impact on profitability. So number of sold products, obviously we have to modify this one as well. So we have to pick this line, and after that just we can roll it through. Also, I would like to change the years, because now in 2024, 6. Doesn't matter much, just come on, we are in 2005, not 4 anymore. Okay, unit price. What you can see, it's already linked in, so we can see that we are excellent. Then probability of gaining revenue, this is coming from launch success. So yeah, this one, probability of gaining revenue. We just link it here. The benefit of using legacy hardware is that at least it's not exploding in the first 8 minutes. Okay, realizing revenues. Obviously this one multiplies this number with this number and this number. So we are using the probabilities, and that's why we have lower numbers if it would be 100%, but somehow it must be represented, so that's the best case. Expenditure cut due to R&D. So practically what we don't have to manufacture. Probability of successful expenditure cut, so let's start with here. So probability of first stage reusage. This one, because not just reusage but also success of the launch must be accounted. So that's why it's this line must be copied. Because again, this one is the Yes, unit cost. Unit cost is coming directly from the dataset, so we don't have to do anything with that. Number of first key components, or number of first stages manufactured, it's already linked here. Number of produced second key components, or second stages, it's also linked. So we can see that we have to spend this amount of money for first stage manufacturing, we have to spend this amount of money on second stage manufacturing, which will be really funny, because once we are able to recover the first stages, then their ratio will be way smaller than at the beginning. Is it? Not so much. Okay, so, but yeah, because this one is half and this one is not half. Yeah. Sold of goods. Cost of sold goods, we have the data here, and after that the gross profit margin is this one. So, wages. Unfortunately, in the case of wages, we don't have much information. So what we can see, since this is a private company, so it's not listed, they were employing, according to their last publicly available data, they were employing 321 people. Some of them can be carpenters, some of them can be engineers, some of them can be secretaries, or yeah. So at the end of the day, we have no other data. We don't have other quantitative or qualitative data. So after that, I was taking the average gross, most necessarily in France, because this is a French company. Then I multiply by 2, because we should be competitive on the labor market. And after that, we get this annual wages data. which is not that great, but at least something. Also, we have depreciation, because at least from the balance sheet data, I was able to trace it back that we have long-term assets, and in long-term assets we have property. So these are all the offices, manufacturing buildings, warehouses, manufacturing equipment, which has a longer lifespan than 1 year. So property. And that's why if you have property, then we have depreciation. So depreciation of 20 years. I set this up because I had no additional data. And then we can see the sad reality. So in the first 2 years, my company's, at least this setup, is absolutely in losses. So tremendous losses, and a bit already here and there, because I'm launching a small set of things into space and earning not much money because my expenditures are way bigger than my revenues. But after that, if I'm able to survive and scale up, then we can see that it will be way better in the future. Yeah. And after that, we can see financial revenues. Okay, we should calibrate this one. Where are you coming from? You are coming from interest on debt and cash reserve. Well, cash reserve is 0. Or it's negative because at the beginning it was 0. Sorry, not 0. They have 2.4 million euros for these losses, so practically 0 at my scale. But also the company doesn't have any debt. So they have 2.5 million euro of debt. So mostly they have only shareholders' equity. Sorry, shareholders' equity. So this 266 as equity from the 2 owners of the company, and that's all. Which means that we can be much more indebted. So we can say that, okay, there will be a need for funding need for survivor. In my case, this means that at least my cash reserve should be increased in the first year to provide a runway. So runway, financial runway is always a term in startups. So if until you are able to ramp up your production, then you need some money to cover your expenditures. So in my case, this runway should be above the sum of the first losses, or the losses in the first 2 years, and also some additional money to sleep well. So obviously this runway need will be different from company to company, but let's say that right now to execute this beautiful strategy we need this money and that money. Wow, it's a nice number. Usually it's not nice. And let's add some margins to it. So let's say that we just need 2 billion euros. It's not much. It's just one lunar launch fee or price tag at the SLS program. So for me, it's a lot of money. In this business, we can say that not so much. Governments can put this amount of money in, to the company, but obviously we will go to private funds. So in the future, we will check that what would be the cost if we would use bond issuance, what would be the cost if we would issue equity. So we will check the different approaches. Right now we know that, okay, this is the funding need for survivor. So, which means that now we can extend our cash reserve with this one. And also, right now, just make it simple, so our debt will be So somehow we are taking up loan or whatever, and after that. Let's highlight it somehow. I did not use orange. Yes, I used orange. Then purple. Other purple. Yes, this one was not used. What is this? Pink. I'm bad with colors, so for me it's pink. And after that, let's go forward. So right now we are not starving to death because we have money. And then we got financial revenues. So we can invest this cash reserve into interest-bearing assets. So and after that, what remains? I mean, okay, so financial revenues. Okay, in the first year it's 0 because this would create confusion in the Excel. But after that, what remains after the first year? Then we can invest it at 4. Why 4%? This is revenues. Okay, this is a mistake. So it's 2% interest rate. This is the same problem again and again. So nope. Here we go sideways. Okay. Why are you negative? I'm running out of cash. Oh my god. Why? It should be okay. Because it's still insufficient. Okay, let's keep it this way and then we will still optimizing the funding need. But yeah. Yes, because now we have paid interest and in the past we did not have. So this is also a vicious circle that if we need money, then we need more money because we are not profitable. So paid interests are at this level. Yes, interest on that 4%. This is absolutely not reliable. So we will refine it based on market data, but for design purposes it can be okay. Yeah, we can accept this. At least we are checking the numbers, then they are okay, so the Excel is doing well. Hedge expenditures, later where we will mitigate the foreign exchange exposure, then we have to deal with this one, or we can set them also in case of financial lease. But right now we have also some losses in terms of financial profit. Which is bad. Okay, so our losses increased. And we still must compensate it. So in this case, unfortunately, this is a manual work. So let's see that if we are 2022, are we still in losses or we are running out? No, we are not running out of cash anymore. Maybe there are more sophisticated Excel ways for that one, but yeah. Okay, that was negative. So no. So if we are setting it to 2.1 billion euros, then we have positive cash reserves here, which is nice. And also our debt levels are not that crazy anymore. Okay, now what we can see here that until this company had no debt at all, now it has, which means that we are using a lot of leverage. So this is quite a risky plan, but we are using not our own money, so it doesn't matter much. Okay, financial profit is calculated well. Are you working well? Yes. Profit is okay. Yeah, corporate income tax in France was terrible. I think now it's reduced. So let's check it. Price Waterhouse, so PVC corporate tax rate database is quite reliable for France. Yeah. If our turnover is above 250 million euros, it's above. Okay, it's not complicated at all. So right now is 25%. So there was a tax cut in France, which is good. Less intense incentive for tax optimization. We will do it anyway because I would like to show it how not to do it, because it's unethical. But also we have to say that, okay, if this one is negative and that one is, then we don't have to pay tax. It would be really strange if we would pay negative taxes. So taxpayers start to subsidize the company, which is happening usually, just not this time because we are better than that. Okay, we are not paying any dividend in the first 2 years, obviously. Why not in the last year? Come on, we should buy it. We'll do it. Our shareholders will be happy. And yeah, right now the exchange rate is also 1-to-1, so later on we will change this when we are calibrating it to realistic scenarios. So, oh boy, what happened here? Third year. Something went wrong here. We started to pay taxes. Paying taxes is bad for companies. So I'm even losing more money than before because of tax payments. Terrible, terrible things. I don't know why companies start to cheat their taxes away, which requires some more debt. Okay, so this is a 101 for financial sustainability. So now from the original 2 billion, we have to increase it to 3 billion euros. But now we are not running out of cash anymore. And also we maintained our profitability at a reasonable level. Yeah. Okay, so now we just have to write it down because yes. Pre-tax margin is pre-tax profit divided. Pre-tax profit is divided by the revenues. Then also people are using EBITDA margin because in this case you can see that how efficient you are in terms of revenue generation. So depreciation must be removed because that one is artificial, so it doesn't generate any cash movements. But in this case you can see that what you were producing and selling, then what was the margin of it. So operating margin is not so good in our segment because we have a lot of depreciation, which would bias the data. And somewhere we should also, we don't have further, yeah, gross profit margin. Gross profit margin is just the ratio of revenues to cost of sold goods, so without wages practically, and that's all the averages. Later on we can compare it to the industrial averages because the modern database has data about this when we will talk about valuation, so that's why it was included. So, this is where we are stopping today. So we already understood the situation, also designed something, and then we were coming up with some financial solution for pricing and problem identification, and after that we created also the profit and loss statement, and also we have something about our balance sheet. So now we have, at least in terms of Excel level, we have all the data for the valuation. So next week we will do the valuation, and also we will write the remaining part of the report, because right now it's missing.